Hello, everyone. I'm Naré from Angel Investor Club of Armenia, and I'm happy to be here and happy to have you all discussing how angels will support the growth of the startups. First speaker that I would love to invite here is Lauri Antalainen. He's president and board member of EstBAN, and he serves on the advisory board of Latitude 59, Estonia's leading startup conference. He has invested in more than 50 startups and achieved several successful exits. Lauri is also the founder of Digivice and consulting firm helping companies drive growth through digitalization. So applaud to Lauri. Thank you for coming. We have Grigor Hovhannisyan, president at BANA Angels. Grigor Hovhannisyan is the co-founder and president of BANA Angels and general partner at Formula VC. Grigor is pioneering investor and entrepreneur with over 2 decades of experience in Armenia's tech and innovation sectors. Thank you, Grigorjan. We have Ruben Osipyan, CEO at STAN. Ruben is the CEO of STAN Angel Network, a former startup founder and CFO at a large software development company. Ruben is deeply embedded in the tech and innovation ecosystem of Armenia since 2006, actively engaged in community development, teaching at the American University of Armenia. And we have Samson Avetian, CEO at eqwefy. Samson Avetian is a venture finance professional and CEO of eqwefy, regulated investment platform that enables investors to access leading Armenian startups on the same terms as professional venture capital funds and angels. And the last but not least, we have Peter Bilzerian, tech entrepreneur, US Managing Director, MPP Insights. He's a tech entrepreneur, data leader, and angel investor. He started his first company at the age of 15 and now serves as the US Managing Director and investor at MPP Insights, a data engineering and analytics firm headquartered in the United States with an R&D hub in Armenia. Previously, he led data engineering and business intelligence initiatives at Bank of America. His work and advocacy has been featured at the New York Times and Good Morning America. So welcome to the panel. Thank you for being here. And we will start with the question to all of you. Angels are called the first believers. In your ecosystems, are angels really enabling companies to grow from 0 to 1? Or are they waiting until growth signals are already visible? Lauri, let's start with you.
So it works. Hello everyone, Lauri Antalainen is my name and I'm from Estonian Business Angel Network. So at this EstBAN, we have more than 250 members. So to answer your question, when you have such a wide variety of angels, and I know that you here at Armenia too as well, then there's those angels who invest really early, just at the stage where the founder might just have perhaps a very early prototype and then maybe a slide deck. And there are those angels who invest when the startup already shows the signs of growth. So the good thing is that with such a large number of members that we have both in Armenia and Estonia, you will find those people who will support you in whatever stage you're at.
But most of them are supported from very early stage, or when the signs are already visible?
So the way it goes,
approximately.
So the way it goes is that the more unexperienced the angel is, the more they support at the earlier stage. So usually when the angels get a bit more experience and they actually start measuring their returns and focusing on those results, the more they try to see the signs which show that this startup actually has a chance to get to the next level. But this doesn't mean that there won't be angels who support in the very beginning. What's really good in Estonia is that we have, we count now 11 unicorns and many early employees of those unicorns. They are pretty well off and they just sometimes support those startups for the mission. So they really like the founders, they really don't care that much, these are small tickets for them, so they support them at a very early stage.
Thank you. Grigorgyan, what's your point?
I'm gonna agree with Lauri. I mean, not agree, but it's kind of the same. In BANA Angels, we've had some investments that have been in very early stage. But for the most part, especially now in the last couple of years where technology has become much more available than before, founders have to have at least something built, something tested, some MVP or initial traction. Also, it depends on the founders. So some founders, the more experienced ones, will be able to raise money in a very early stage, easier than first-time founders.
Okay, thanks. Ruben, what about Stan?
Yeah. So in general, the answer is the same. In our case, most of the investments are done in the pre-seed stage, in the early times. But even in the early times, angels want to see some proven validation of the idea. If you are coming only with the idea, it is very hard to help. And there is also one very important thing is that it highly depends on the founders. Because the founders are expected to manage the relations with the angels and investors and make them become those smart capital providers. And of course, there is also an element of luck when the profiles of the angels and the founders are matching. And then in that case, given the background of the angel, they can give much more in terms of the support and knowledge to the ecosystem. Also it is very important to be strategic and select the niches where and how you are going to do the investments. And if that everything happens, you are able to give really smart capital.
Okay, Ruben. Samson, I believe that eqwefy requires some kind of traction and something.
From the startups?
Yes.
Yeah, the ones we work with need to have already VC funding or professional angel funding before we can list them on the platform. I think in terms of your question, what stage? I think it, as mentioned, it depends on the founder experience, number one. I would also add the fact that there's also liquidity cycles. So sometimes, there's more liquidity, more risk tolerance available, so people might invest in earlier stages. And in times the liquidity is less, and people wait for more traction to invest. So I would add that too.
Okay, thanks. Peter, you are investing yourself, you are an angel investor, like what's your view? Are you waiting for some kind of traction, or you can just invest money with idea only?
Is this on? Yeah. I hope it is. Hey everybody. So, I'll give you the investor perspective. I straddle between the US and Armenia, so I'm kind of part of both ecosystems per se. In the US, personally, there's a bubble. There's a huge bubble going on with AI. And now I think a lot of angel investors, venture capital, and private equity, they're starting to realize that they do have to do a little bit of de-risking. There's a little bit of de-risking required before they can invest their capital. And it's so easy now to create an MVP. It's so easy to get that proof of concept very early. And what I'm really trying to say is it's easier to de-risk it, and the investors are requiring it to be de-risked. So that's the investor perspective.
Thank you, Peter. So we will go to the direct question to Lauri. So what lessons from Estonia and the Baltics should help Armenia expand its angel investor base more quickly and support more scale-ups?
I would start this answer again with idea that as I just before the panel asked each one of the BAN leaders how many members they have. And in total, you have more than 100, like 130, 40 angels in your groups. And each one of those, or almost all of them, are actively investing. So this is already pretty good. Now, if you want to know how you get angels to invest at certain stages, which of they are perhaps not finding attractive now, then you cannot really expect the angels to do something which does not benefit their returns. So what you can do is that you can help your founders to get over those places where they are not yet attractive to the angels, and then bring them to the angels. So in Estonia, for example, we have different incubators, accelerators, different state-sponsored programs which help them with all the things which they need to still do when they're in the death valley, where they are not yet attracted to the investors. They have their cost base and they somehow have to survive. I really don't know how you can get angels to invest at a stage which they are not comfortable at.
And do you have some like educational program for angels as well, or you just rely on their own decisions?
Yeah, we do actually have training programs for angels as well. The kind of first teaching they see, so to say, is when they join EstBAN. Then we actually kind of educate them to mostly to kind of how to not waste money. One of the things what beginner angels do, I've seen it happen time and again, is that so there's this. A lot of our members are, for example, those early employees of those unicorns. So they have this liquidity event, they get $1 million or a couple in their account, and then they find this startup that they really like, and they put like 50,000 euros into this startup. And this is a big no-no, because if your like net worth is 1 million, you cannot really make 50,000 euro investment. So we actually educate them kind of to preserve their money, to understand that no is also a word they can use, and to kind of build the portfolio. So this is one thing that we teach them. And then once they are already seasoned, then we have this, we call it the Major Angels program. If you have made already 5 investments, then you're eligible to join. And we have those, together with FIBAN, Finnish Business Angel Network, we have that training program for seasoned angels.
Okay, thanks for sharing. Grigoryan, BANA has built a strong community. How do you balance ecosystem building with ensuring startups get the capital they need to scale? Is it just the community of people, or how do you measure?
You kind of have to do it in parallel. You have to do both sides. Because so when BANA started, it was we had to work both with founders and angel investors because the communication just wasn't there. So they both have to have the right expectations from each other. So since day one, we've been kind of working with angel investors and potential angel investors. And the last 3 years, every year or sometimes twice a year, we have this investor training programs. Because if that communication is not right, if the expectations are not right, then investments are not going to be successful either. So we do it together. It's the community building, because still angel investing is you invest in people. So that community has to be there, and it has to work well in order for the angel investors and founders to be able to work together and make good deals.
Yeah, to make that human-to-human connections and then proceed with the investment. Okay, Grigoryan. So, Ruben, you have been on both sides, right? We know each other from the founder side of the world. So, what's the biggest mismatch between what angels think fuels startup growth and what actually drives it for founders?
This is a very interesting question, and by the way, who doesn't know, I used to be a founder of a startup that received funding from BANA angels, and Grigor was one of the angels who invested in our startup. So that was really teaching experience. And when I was reflecting on my journey as a founder, I understood some very important part, which is, by the way, was communicated by Peter the other day. He was saying that the work of the CEO is to connect the people. I would rephrase it that the work of the CEO is to manage relations. And for the founders, it is their ultimate goal and objective to manage the relations with their stakeholders and build the trust. And what the biggest mismatch is happening is that founders are coming and they're expecting that angels would be coming and proactively helping by providing the smart capital, but it is actually the opposite. It is the responsibility of the founders to manage those relationships, to be proactive, and actually be able to get the advice from the angels. Another big thing is that oftentimes angels are really providing the advice to the founders in terms of the questions, in terms of the missing questions, or in terms of clear advice. And then you just notice when you are the third neutral party, you notice that startups are really not accepting those advices. And this is something that is really preventing the growth, and it is also creating the gap between the investors and the founders. And this is one big thing that I would like to emphasize. On the opposite side, when you see the periodic, say, monthly or quarterly updates from the founders, one-to-ones between the founder and the investors, you see that all of the parties are aligned about what is happening in the startup. And in that case, angels really can give the most that they actually are capable to do. So summing up, the biggest mismatch is where founders are giving up on some portion of something that they need to manage, and they need to be really proactive there and manage angels in a way that they get the most out of that.
One not-planned question raised right now. So when you talk to the founder, can you identify, will your angel groups, angels invest? Do you have some kind of metrics to identify?
No.
Or not yet?
No, I don't have that, and I always tell this to the founders, that I had a lot of cases where I thought that the angels will love this startup. This startup comes to the stage, they pitch, and they fail in terms of getting the investments from the founders. And the opposite also happened when I was shortlisting the startup to pitch just for having some specific number of startups pitching on that day. And then angels love this founder and they just invest there. And this is probably because each of us have our specific profile, experience, and angels are looking with very different eyes on the startups, and it is very difficult to predict how they will act.
Okay, thanks. Samson-can, eqwefy lists vetted professionally back-end startups. So back startups. Beyond connecting investors, how do you help these portfolio companies grow once they are on the platform? Is it just applying and appearing to the platform, or you have something going on?
No, I think the value add, so we had two initial listings, and the value add apart from the money was, and this was a bit of a surprise to us and from the feedback from the founders, was that this community is very important to the founders because the community is large, and even if you have investors like $100, $1,000, $2, or maybe $50, all of these community members are valued, and they are across the world. So Armenia, Japan, Australia, whatever, many places. And all of these people, and a lot of times in the diaspora, wants to help the founder out with connections, references, corporate contacts. So this was something that we knew a bit about it, but it was made quite clear after the first two rounds. And I'm sure the guys and John are helping out with the founders in various ways. But I think this Armenian diaspora connection and networks are very, very helpful to the companies.
Okay, so Peter, I have a question for you. The definition of angel investor is changing. Do you think the next generation of angels will look more like mentors, operators, or micro VCs? And what does that mean for startup growth?
That is a fantastic question, Naré. And I'll tell you, it is looking like operators. The investors look like operators. See, one of the things when I first started working with Armenia 6 years ago, it's actually, you were one of the first people I met.
Yeah.
When you were doing Everytech with Sarkis, I came to the Hero House, and first I was inspired by what you did, and when I left, I think they're builders. I said, those are builders, and we need to connect two things to builders, right? The first one is other builders to fill in the gaps. Second, it's the go-to-market strategy. And, well, maybe there's a third, it's the capital, obviously, which all of these great people provide. The future of angels, generally, it's becoming a younger demographic. When I first visited Armenia, I saw a lot of the makeup of the diversity of angel investors, and I was, quite frankly, not astonished. I was not astonished by any means that it skewed very much old, and they don't look like the next generation of founders and builders. Now, to put that more precisely, we need more women angel investors. And unfortunately, well, actually, I'm going to say fortunately, it's improved over the last half decade significantly. But when you ask that question, what do they look like? It's the operators, a lot of the female and women who are professionals in our great diaspora that come here and they provide their expertise on the ground. And it's less of angel investing. I would say it's kind of a micro private equity model where they provide their resources directly. The model of angel investing generally, I think it's going extinct because of that. And the future of angels look more like private equity. Because, obviously I could go put money into a company, any company, and maybe there's some light advising 2 hours a month, or maybe there isn't. Maybe you don't want to be involved. But your chances, you are basically parlaying your bet and betting on it double by investing your time and expertise, your networks. So I think it's the people with that mindset who will have A, more successful companies, and B, we're also going to attract more of those people. The hope is that we can reach into our great diaspora all over the world and bring them here and not contribute their capital. Money, you can find money anywhere. But what you can't find is that technical knowledge. It's the experience. And I'll give you one more thing. Those are the people who I talk to all the time, who work in banks, they work in logistics. These are high-level people who may not have a lot of money to invest, but they want to be involved. They want to be here.
So, isn't it like that angel investors should expect less traction than VCs? But if we consider them to become many VCs in the future, who will fill that gap of the first very small checks for the startups?
Well, filling the gap, I think it's also the same people, those same angel investors, because chances are they're very well connected to those venture groups, to private equity. But if they're not, also remember what I said earlier, it's getting more inexpensive to get things going, unless it's deep tech, biotech, things that require millions of dollars. Generally, anything with, SaaS startups, low cost, low build MVPs, and then you actually execute it. But I think kind of what you were after is, where does the first check come from, right?
So, what's the case with Estonia, Lauri? So, do you see that kind of coming? turning angel clubs and angels into the mini VCs, like asking the same question, expecting the same traction, or they still will remain the angel ones?
What do you mean exactly? Just
So VCs are expecting more traction, right? They ask tougher questions and they do like more deep due diligence compared with the angel checks, right? So do we have that trend to become mini VCs? Because I hear from the founders when they pitch to angels, they feel that they are pitching to VCs. Is it the case for Estonia as well?
Not that much really. VCs clearly invest in later stages where they they are not managing their own money, so they need to be more thorough in their decisions. But in Estonia, I would say that the ecosystem is as mature that sometimes when you have this lead investor, lead angel that everybody knows, sometimes they would just get those other 10 people invest just because they know that this lead angel does a proper job in selecting this startup and making sure that all the due diligence is done, making sure that all the paperwork is at place, and so on. So this is not really a threat that I have kind of noticed.
Okay, thank you. Grigor, should angel networks focus purely on early growth stages or evolve towards syndicates that follow startups farther along the scaling journey?
So going back to the previous question, actually, the first checks pretty much always come from angels in most cases. Again, unless you're a repeat founder. And getting investment from angels is a lot more personal versus going to the VCs. VCs have their thesis, VCs have their rules. So first of all, you have to comply with all that before you're even considered for an investment, right? Angel investor, you actually personally have to convince that you can do or build whatever you're pitching. And in our case, between like BANA angels and Formula VC funds, we do all three actually. So there is a lot of cases for very early checks, like up to 50,000 between a few angels. We do syndicates for the startups that are in growth stage. And in some cases, we provide opportunity for the angel investors to co-invest with the fund. So I think as the ecosystem of investors grows, and all three are kind of necessary, because it's also for investors, they are diversifying their investments and securing it. So you take higher risk on very early checks, you get big returns. But you also have to secure them with later stage investments and like co-investments with the VCs. So as an investor, your total like net return is positive. The worst case is when angels just invest in a few places that they like and they sit back and wait. It's a long game. You have to do it consistently in order for it to be successful.
Thanks for sharing, Grigorjan. Ruben, do networks like STAN risk becoming too exclusive, limited growth to familiar circles rather than backing new and unconventional founders? I mean, do they need to have like connections to Ruben or someone to get in? Or you have cases where like cold application or cold call got the investment?
Yeah, they need to be connected with me and with our angels. And in most of the cases, the startups that are reaching to the pitching stage, they are coming through the personal connections and intros. And this is not because we are exclusive and we want to work with the people we know, but it is because that trust element. Because that reference, which is given by someone that you trust, is helping you to overcome all those stages of building relations with those founders. And based on that trust, you are able to move to the next steps. And again, about the trust and also the previous question, cases when startups are saying that communication with the angel groups is becoming more like communication with the VC in terms of the complexity of the conversation, this is a sign that angels are not convinced. And this is also the sign that they are asking more and more questions because what you present them is not convincing and they are not really getting that excitement about investing in your team that they have initially. And as opposite side, angels are not VCs. And we had the cases when the startup made the pitch and the other day they already had $60,000 of commitments because it was very good pitch and the founder did everything and angels were just happy to invest there. They didn't want to go into the due diligence, into all those things. They wanted just to support this team. And whenever it becomes like long questions, due diligence, checklists, etc., this means that startup is not convincing them yet.
So for all founders who are passing through the long due diligence with Stan, we can say that they didn't convince it. So they are at the point. Okay.
Yeah, the more question Angel is asking, question is a type of say that what you tell me is not convincing, and you try to ask questions to make them think about this more.
Samson, we have very interesting new thing in our ecosystem. It's the investing platform, right? So I would love to compare for everyone who is kind of confused what is the Angel Club, what is the Angel Network, and what eqwefy is doing right now. I would love to clarify the differences and how they are different, what are the stages, how they're helping the founders in what stages.
Sounds good, thank you. So on the platform we have investors investing everything from $25 to $20,000, which means there is some overlap with angels as well. From an angel point of view, what are the pluses and minuses? The pluses are that there's a huge amount of due diligence, regulatory compliance, stuff like that we have to comply with. Every single dollar that comes in through eqwefy gets reviewed, checked, basically escrow accounts and everything. Then on the other hand, every time every dollar goes to the startup, there's a bank check in every legal aspect of things that everything is correct. On the downside, obviously, there are fees that are connected. Maybe the angel fees don't have to pay these fees that they do to us, to our banking counterparty, and others. And plus, from the angel point of view, similar to VCs, in order to align incentives between eqwefy and our investors, is we charge a carry fee of 20%, which means that's also a bit of a layer on the upside from the angels' point of view. So those are the major pluses and minuses, so to say, comparing to angels. And the other thing that I would mention is at some point we want to make sure that we provide access to secondaries. So people will not only be able to participate in seed, pre-seed, but also maybe later stages, Series A, B, C. So maybe people can have access to, shares of later stage companies. I don't want to mention names. This is a trend that we've seen elsewhere, and we'd be happy to, from an investor's point of view, this would be very positive to have participation in later stage startups as opposed to just pre-seed at seed. There's something we're working on, and not everything is straightforward, but eqwefy was not straightforward from the beginning, so I think we'll put that in place as well.
Thanks, Samson. I think that's very important because I know that founders are sometimes asking, like, should I pitch to Stan, BANA, AICA, or I should be on eqwefy? That's kind of most trending question. Everyone is asking that. I suggest to apply to every club you can, because maybe you can find your unique angel in that unique club. And after having kind of backing from the angel clubs and VCs, Samson is waiting for you to list them on eqwefy, right? Do the due diligence, or
I think one of the most positive things about our ecosystem, I would say, is the amount of collaboration and interchange between every one of us that's on the stage and those that are not. And I think that's fairly exemplary versus many, I don't want to say many other places, but in any case, that's something that we can all be a bit proud of.
Yeah, actually, we got that feedback from our guests from EU during Gateway to EU conference. They were wondering why we are so friendly with each other. They were asking like we are different networks. You look like a friends. I said because we serve to Armenian founders and we serve Armenian investors. Every money is green, every money is helpful for founders. So we unite forces to help them to get the funding and grow. So that's something I believe very unique to Armenia because they are, you all deserve this, because I see me calling Grigor or Ruben asking like, our angels are committing to this startup. Are your angels are committed? Let's make it happen. Let's help to finalize the round. So I don't know if any other country have that kind of networks talking to each other like daily. Thanks for that partnership, by the way. And I have a question for Peter. So you have built businesses that connects the US and Armenia. What can local founders and angels learn from international markets about building scale-ups, data-driven companies?
Ooh, that is a loaded question, but that's a great question as well. What I think you're asking about is how do you scale up startups?
Yeah, what are differences do you see in Armenia? I know that you have portfolio companies in Armenia, you have in US as well. So how do you see the differences and what we can learn from US experience?
Well, let me just tell you about a great real example of how we actually took an Armenian company and scaled it up. I think learning by example might be the best. So, starting from the beginning, there was this company called MPP Labs here in Armenia that did data engineering and data analytics. They service companies all over Eurasia, the Middle East, and I have a background at Bank of America doing data engineering, business intelligence. My background is technical. I'm a technical guy. I may not look like I'm technical, but I'm technical, or at least I try to be. And when I came to Armenia a few years ago, I met the founder of this organization. I thought, this guy's a genius. This guy's a genius. And then I forgot about him for maybe a year and a half until he approached me. And again, this isn't a startup, by the way. This isn't directly what we would consider a startup that's pre-revenue, pre-Series A. This is a service-based company. But it's really, they act like a startup. And they need to export to international markets. So he said, well, I want to open up a US office. We want to sell to America, open that door. And really, I helped him do that through local partnership. And I think startups have a lot to learn when they understand what does local partnership look like. So long story short about MPP Insights, as my model suggested earlier, I act like a private equity firm. I invested into 25% of the entire company. We moved the entire headquarters to the US, rebranded it as an American company, and we opened up a full office in the US to grow the US market. Now, unfortunately, many startups are not flush with capital to do that, to open up a full office. And that's fine, right? That is completely fine. But the local partners are what matters most. There are low-cost strategies to do the same thing. Again, our great diaspora. There's people all over the world who are willing to help be that local facilitator and partner. Most of those people, right, they're highly technical. So the story with MPP Insights, we brought them to the US. It's a great success story, by the way. We're expanding by 30 data engineers over the next 6 months here in Armenia because we brought it to the US. So what I call, and I've been saying this a lot lately, we dumped jet fuel on it. And that's what it's supposed to look like. It's really having an ambassador there for these Armenian companies. You build a real bridge. That's really what it looks like. And what you can learn from the US, probably, just have local partners. I mean, really, you could learn that from anywhere, right? If you enter into the Middle East, you always need a local partner. If you enter into Asia, especially Japan, you need local partners.
Yes,
and I'll tell you something that's fascinating. We have Armenians everywhere in the world, even in Japan.
Yeah, we have angel investor, by the way, female angel investor from Japan. So we are, we are having everyone from every corner of the world. Yeah, so having, to summarize the advice or something that could be helpful for companies, if they enter some new markets, find a local partner there instead of spending money on researches or seeing what happens there. Okay, thank you. I think it's very valuable for startups because sometimes I see they try to thrive without local partners and sometimes they fail just because they don't know the culture of that country and the business culture. So we are going to the final question I'm asking to all of you. So what's one uncomfortable truth about angel investing and growth that founders rarely hear, but they should? We will start with you, Lauri.
That's an awesome question. I must start with this. To kind of give you the answer, angels, at the moment where they evaluate the startups, they concentrate on two main things. First is the kind of the idea, business idea, the market, etc. And the other one is the people, the founders. And previously, when we talked about experienced and non-experienced angels, then the more experience the angel has, the more emphasis they put on the founders. And vice versa, if the angel is not really experienced, all they care about is the idea. Like basically say every single angel that joins EstBAN, they talk about like, oh, this startup has such a great idea. Now, my experience is such that I have had one almost 100x exit and one that is valued at the moment 50x from what I invested in. And both of those startups pivoted after I invested. So they pivoted totally. They changed their total product, everything, but the team stayed the same. And that's the idea, that when you invest in a startup, the idea might change, and it will probably change at least to some extent, but the team stays the same. So this is something that you need to consider. Now, why is this uncomfortable for the startups? Is that you have to realize that sometimes you get the no because of the team. The silver lining here, though, is that it's not because you're too tall or too short or you're too female or whatever. It's because perhaps that there's some skills in your team that is lacking or something that you can change the way you do things to be more attractive to the investors. So just to finish with this example, whenever I have these startups talking with me, pitching to me, then I'm waiting for them to make the follow-up. If they don't do it on a reasonable time frame, then this is the kind of idea that I get, that this is the way they do business. They are not systematic, they are not like very thorough with their business, so maybe approaching me, so maybe that's the way they are with their business. So just one example. So short answer to your question, the angels actually evaluate your team quite a lot.
More than the market or business plan, because things change, you can learn, but you can't learn being team just in a short time, right? So
exactly.
Yeah. So to summarize, your answer is the team and also the following ups, right? Following up.
Following up was just a small example. So
yeah, but you can lose your angel investor just because of lack of follow-ups, right?
Yeah. So what I want to see in the team is, first of all, that they have this sense of urgency, that they really have to do things quickly. And second thing I want to evaluate is, do I believe that they go through the thick and thin to get to the end result?
Kind of testing their business culture.
Exactly.
Yeah, thank you. Grigor, what's your secret that you want to share?
So investors really like when founders are on their last nerve and uncomfortable, because that's when they are most creative. Because when you have a lot of runway, you kind of relax and start building at your own pace when a lot of other teams can outrun you. So we're looking for those that have that sense of urgency all the time. And another thing, a bit funny, but if you're pitching to the investor and they keep asking you the same question and you're, replying with a similar answer, they kind of stop listening to you after the second time they ask the question. So don't do that. Listen to the questions and think about why it's being asked.
Yeah, thank you, Gevorgyan. I think we need to maybe summarize in an article form these all truths and share with the founders, because they may think that it's very simple, but I believe they can make or break the deal. Ruben, what's from your side?
I would elaborate on the angels with our group and their profile. What I figured out, and it is very obvious, but even to me it was unspoken truth. So angels are doing this part-time, angel investing. They do their main things like full-time, which are generating most of their income, and they are not able to spend most of their time helping their portfolio teams. And given that information, again, some tip to the founders, you need to be really impressive, you need to really manage relations with them so that angels spend their extra time, their limited extra time on your team. This is the first thing. The second thing, and this is also part of this thing that it is very difficult to predict how the things will happen. It is also the groupthink element, and we also discussed this with Peter. Groupthink is when group of angels is sitting, startup is pitching, and then one of them says, like, reacts actively, like, this is a great team, and other angels who are respecting this particular angel,
They can just join
trust
because
this
of that. Yeah.
opinion, and then suddenly all group is very excited about this.
Yeah, but that's the beauty of clubs, right? Otherwise,
Sometimes-
it's just a one-to-one
Sometimes it is
meetings.
beauty, sometimes it
Yeah,
is ugly
it
part.
hurts, yeah.
It depends on the outcome. And final thing is that actually we all make mistakes. And it is very, very difficult to predict how the things will go. And I think that this uncommon truth is that you need to make the decision based on feeling and emotions. And this is it.
Yeah, I remember that one of our angels was sharing that story of him feeling very responsible for everyone's investments, because he shared that when I say yes, it feels that everyone wants to invest, but I feel responsible for their investments. And I started to not to say yes in the group meetings, just to make sure that I'm not influencing their decisions. So it sometimes can become frustrating for angels as well. Samson Jan?
Yep. Would you mind rephrasing, putting the question, because there's so many answers, so I kind of want to get the question.
Yeah. So the
specific.
question is, what's that uncomfortable truth that
About-
founders should know? Yeah,
About angel investing?
about angel investments. Yeah. That no one
Yeah, I guess
has
group
spoken
thing
of.
is one thing. The other thing, for example, we have another one startup listed. Community always helps. So your presence on LinkedIn, your presence in the community. Startup quality in terms of numbers might be much higher in one case, but if you don't have community backing, the fundraisers are a bit different. So you have to be present, you have to manage relations with the angels. It's kind of difficult when you don't have the contacts, when you don't have the networks to raise the money. So there's a saying whether fundraising is one-off or continuous. I'm more inclined to say that fundraising is continuous. You build networks, you manage relationships, and at some point there will be fundraising.
Thanks, Samson Jan. And Peter, what's your uncomfortable truth to founders?
I'll give you two of them.
Hey.
The first one, you can't fix a bad attitude, but you can teach someone with a great attitude something, but you can't fix a bad attitude. I've learned over the years that I need to trust my gut more. My gut, it's gotten a little bit bigger over the years, all this great Armenian food, but when your gut says something after years and years of experience investing in companies, working in the professional field, you gotta trust your gut. You gotta trust your gut about someone. that first impression is the lasting impression. And if that first impression is a bad impression, it's like a footprint in wet concrete. And over the years, I've made many mistakes of investing in companies, and I've had to walk back from them. I've resigned from boards, I've left companies because of attitude, stubbornness, things like that. Things I should have started with very, very early, but I did not. And my advice to founders is be open-minded, be uncomfortable, be open. That's the truth. Now, the second uncomfortable truth, investors want to make money. Have a way to make money. And if you don't have a way to make money, it's okay to not know that yet. But that's why you have to get great advisors. And, a lot of these great angel groups will help you get there. You just need to be open and willing to accept it.
Thank you so much. Thank you to panelists for this exciting conversation. I will go ahead and do the list of the uncomfortable truths from all of you, because founders are asking me, like, what should I know? What is there something that we don't know? So I will do that. And thanks Digitech to giving the stage to all of us to talk to founders who are going to apply to stand BANA, maybe grade from EstBAN, and be featured at eqwefy, and also get direct investment from Peter. So apply to all of them everywhere. So there is no comparing where to apply, where not, because you need funding, you need capital to raise and grow. So we are here, all of us are here to help you grow. So thank you to our amazing audience. Let's give an applause to all speakers, and yeah, thank you. Yeah.
Thank you very much. I think we can open up for some questions.
Do we have time?
Yes, we still have 3 minutes, and it was very valuable input from the team. I've had the chance to meet some of you individually and talk. I think it would be fantastic to give this opportunity. We have angels here.
Okay.
Non-angels are not
questions.
here. So we already see a hand there, so one, and then there was someone also here. Yeah, the second question. Okay.
Hi everyone.
Please
My name is
introduce.
Mike. Thank you very much for a very interesting discussion. My question is about what's your networks and the angels that are part of your network take and perspective on solo founders, at least at this very early stage. Have you had any successful cases with solo founders funding the angel investing, angel stage? And when I say solo founders, I don't mean just someone with an idea, but let's say with an MVP, part of an international accelerator and stuff like that. So there is some, and doing some active testing with customers. And what's the second question, which is related to the first one, what's your opinion about the recent discussions that soon we are going to have, one-person unicorns, some discussions from Sam Altman and then the founders of the Anthropic and so on. Do you think it's just them promoting their products because it's AI, companies, or you think there is some truth to that in your opinion? Thank you.
I will take this one because there was just recently an exit at EstBAN, one of the syndicates we made, that was made into the company which had a solo founder. And back at days, that question shows that you actually know how angels think. That was a big no-no, this solo founder. But we still decided to invest in him because he was just really this type of character that you just think that he will succeed, and he did, and his company was bought by, he had a marketing startup that was bought by some Israeli big company. Now, about the other part, I've had some discussions, and the general belief is now that it's not such a big no-no anymore, the single founders, and mainly because of the AI. A lot of the things can be done by solo founder with the help of AI. We'll see how it ends, but I agree with this, that it's not such a big problem anymore.
Yeah, you can replace some of the works with AI and price. Yeah, Ruben, sure.
Just wanted to jump in and also add some more thing there. It is very important when you have group meeting with the angels and there is CEO of the company one of the co-founders, and let's say CEO who is also the co-founder. It is very, very, very important that for angels it is very clear that the CEO is the ultimate decision maker, and we all saw several cases when it was very obvious that CEO is looking at the COO, let's say, to be able to answer that question. And this means that the CEO is not the ultimate decision maker, and this is the big red flag, not the fact that there would be the single founder.
Yeah, Peter,
I've got a good answer for you as well. You know, solo founders are okay to an extent, but I want you to think about this analogy. And I love food analogies, by the way. I'll tell you that first off. I love going to a restaurant that is hole in the wall. It's ran by one chef that is great at cooking, because you can connect that business expertise to grow his restaurant. But you cannot take someone who is a business person and open up a restaurant. 9.9 times out of 10, those restaurants have terrible food. And I want you to think about that. Most times when we look at solo founders, they are technical. They are technical geniuses. And we can connect the business into that. That's no problem. Now, unfortunately, it's somewhat rare. It's becoming a little bit more common that you have both the business expertise and the technical expertise. And if you are that person who has both of them, I want to talk to you after this, perhaps, because I bet you have a good company out there. Yeah, you're smiling.
Yeah, and actually I would love to answer this as well from the AICA perspective. So I believe that we will see more non-technical founders raising funding, because they kind of need it for the MVP and proof of concept, the technical guys, but now they don't. They have like all the tools to have build the MVP, test the products, and even launch. And then when they are going back to details and everything to making it bigger, then they start to look for the CTOs and other co-founders. So I believe that we will have that trend of very business people without technical co-founders raising money based on the proved MVPs and products. So we have second question.
Indeed. Thank you very much. Yeah. We have one more question here, and that will be the last question in order to fit the timing. Please.
Good evening, gentlemen. Gevorgyan, fintech industry. So would you mind sharing your experience looking at our industry, fintech, if you have the portfolio company, Z or Axis? So what is the most compelling, non-obvious ideas or industries or solutions you would look in, talking about the fintech industry, and which is more or less defensible? Yeah, it doesn't only stand on tech, but somehow way more defensible. Would you share this experience?
Who wants to share experience?
Was it fintech industry? Did I hear right?
Yes, right.
Okay. So, I'll answer, but we don't invest in fintech for one reason. First company I was involved in was fintech. Co-founder is sitting there, and it's a nightmare because of regulations. So the first thing I would look at is that it is not, whatever you're doing is not heavily regulated. And second thing, that is true for any other industry, what's your distribution advantage? And that's it. So every industry we look at now, like in general, we said technology is easy, distribution has become hard. So from our perspective as a fund or angel network, it's whatever you're doing, the reason we don't like anything regulated is it doesn't depend on how good of a product you build or sell. It depends on like one people or a group of people. They will make a decision whether you can work or not, which makes it very risky. But if you're past that, then it's how well you can do the distribution of your product.
We don't have fintech in our portfolio, but because we didn't find the right startup so far, we tried to invest in one team. It was a US-based team, and the reason why we passed on that opportunity was that the burn rate of that startup was very high, and our investment, even if we invest like with all our network, it would not contribute to extending their runway, and there was no meaning for the investment. But we loved the team and the concept. And also it is very often that crypto-related things are part of fintech. In our case, we don't understand crypto and we pass on that part. But if this is really innovative fintech solution with scaling potential, that is very interesting. And we have exited fintech founders in our network that would be really interested to invest there.
Has any person ever invested in fintech, just to finish the question, ever? So that was the first experience that you had, and twice. Okay, but just because of regulations and the experience from Estonia. Okay, thank you very much.
Yeah, thank you everyone, and yeah, let's give a
big round of applause.
Yeah,
Big thanks to ladies and gentlemen.